charts and see what we can see. On the screen is the Spider Bank ETF, KBE, King Boy Edward, and I use this as kind of a proxy for the overall financial index. This has been an area of concern for quite a while. Today had a bad day, gap down, and the last couple days have had big volume. But this index, in my mind, should be confirming the movement with the S&P 500. They should be moving up together, and that has not been happening. So it's a cautionary area that I'm keeping my eye on. Another area that I'm watching closely is the dollar. It's had this very steep decline. It looks here that maybe it's going to try to level off. Let's look at some range lines and see. Well, my little energy indicator down here on the bottom has been lower, and range support I've got at 76.59, so maybe there's a couple points, a point or two down before the dollar settles out. It has to stop falling and then stop, period, before it can do anything else. So that is really been an area that's caused problems, not so much for stocks because they've been rising, but the dollar is going to dictate the direction for stocks, gold, and commodities in general. Speaking of which, let's look at my pal GLD, the Gold Spider Trust. Just still ripping up the chart here, moving up. Very strong up move. I'm going to stick with it until I'm kicked out, but it's a crowded trade, there's no doubt about it. And this gap here, potential areas for concern. This whole move has been a nice move up, but now we're kind of going parabolic or accelerating. Dave Landry talks about acceleration. Well, that's what it looks like right there. And with these two gaps, it may be setting up for a little blow off, but until it does, I'm not going to second guess it. I'll stick with it. The last chart I want to show you is the S&P 500. And move over here to a cleaner chart, and the trend line from the August lows up just confirms that if you're going to be in this market, you need to be in on the long side, and that's not been easy because of this right in here. And some of these moves that got started early, they were nice, but this mess right in here, that's chop, churn, and grind. I'm sure a lot of people got kicked out, got whipsawed out, and it has been a tough market to trade. But I'm going to stay long until this trend line is broken. I'll go where the market wants to go, and I'm a cautious bull at this point. Speaking of trades, let me show you my Excel spreadsheet, and I'll show you what I mean about not finding a lot of real good trades. So hang on just a minute and let me grab that Excel spreadsheet. There it is on the screen. This is a tally of my current positions since the 1st of October. You can see up here that I'm mostly long, and where I'm mostly long. You wouldn't know this if I didn't tell you, but usually on a day-to-day basis I can find 5, 6, 7 stocks that are blue chippers that I want to trade. When the market is going up, I want to run with the bulls. So I don't want any of these cat and dog stocks, these little thin stocks that go nowhere. I screen for the best of the best. And same way when the market is rolling over, I want to run with the bears and not any of the small little stocks that don't perform. So for me to only be able to, most days, have 1 or 2 trades is very unusual, and it is really kind of telling that this is such a random, churning, grinding, chopping market. It's very difficult to find something worthwhile. My long positions are here. I have no short stock positions. I do have a small bet on the UUP, which is the Dollar Bull Index, and I have a couple of bear ETFs, both of them in the oil patch. So we'll see how it plays out, and I thank you for stopping by. I always enjoy visiting with you, and I look forward to doing it again soon. Thanks so much.